Say goodbye to negative gearing and capital gains discount on housing. I'm Biko Konstantinos, and that's what we're going to talk about today. If you'd like to see more content about real estate and a broad range of other finance topics, subscribe to my channel. I'd love to have you on board so together we can keep on top of everything that's going on. And liking this video will help YouTube to share it out to a bigger audience, which would help me heaps. Now let's see why the era of over-generous housing deductions in Australia might be coming to an end. To consider this question, we're going to look at the Grattan Institute Orange Book 2022. So this 2022 Orange Book maps out a policy blueprint to reignite wages growth and boost Australians' living standards. This Orange Book that the Grattan Institute has been delivering for government policy has been going now for 13 years. So it's a respected document and will be considered seriously by the federal government. Now, the purpose of this Orange Book being produced now is due to the upcoming Australian federal election, which is happening in May 2022. So no matter who wins that election, the Grattan Institute is putting forth its recommendation regarding policy reform to improve lives of Australians. Now, whenever policy changes are discussed, many people take notice, especially if the policy change has the potential to impact on people's wealth, their standard of living, and their opportunities going forward. And when it comes to housing, Australians are addicted. Why? Because 2/3 of Australians own property, and those 2/3 of Australians have seen their wealth massively increase over the last 2 years as prices for property have skyrocketed. And everyone knows if your wealth increases and you're doing well, you don't want to see that wealth decrease again or go back to where you were prior to the rise. So we've got 2/3 of Australians who have normalized this new wealth level and will be paying very close attention to see if there is anything that could potentially jeopardize this. And as the vast majority of Australians' money is tied up in real estate, governments also pay very close attention because real estate is really the backbone of the Australian economy. So the government knows that any crash in real estate would be disastrous for the Australian economy. And they also know the power of voters who don't want to see their real estate values drop, which would have contributed to Labor's 2 previous attempts to get rid of negative gearing to fail. So the government has 2/3 of Australians extremely happy with their property prices. But what about the other third of Australians? So this is the issue for the government and whoever is elected in the next election. Because that 1/3 of people is a very significant number that now face the current prospect of extremely high property prices, which will take a very long time to save up a decent deposit. So housing unaffordability has deteriorated across the board, and the number of homeowners in all age categories is reducing quite sharply. On top of that, rental demand is at crazy levels, which is pushing the price of rents up, which is forcing more and more renters into what we would deem as the poverty line. So the big challenge for the government is there'll be a lot more people requiring government assistance and support just to live. But sadly, there'll also be a large increase in the rates of homelessness as people are forced out of their homes because they just can't afford them. And after all the billions spent on the COVID rescue type packages, the government just can't afford to support millions and millions of Australians. So this is why policy change is being recommended by the Grattan Institute. So from the Grattan 2022 Orange Book, we're now going to look at its assessment of the current housing in Australia, and based on that assessment, the policy changes it is recommending. So Australian housing has become increasingly expensive in recent decades, and public anxiety about housing affordability is rising, and I would say it's rising very sharply because house prices have grown much faster than incomes have. To see just how fast they've risen, check out this graphic here. Now, because we've seen such drastic rises in the past 12 months, these house prices would actually be even higher than that. And when we look at rents, we would have seen a sharp uptake in rent prices, which has been widely reported lately. So if we were to look at house prices around here and wages around here, we can see there's been a massive gap between wages and house prices. So if you're a wage earner who doesn't own a property, it's becoming more and more difficult for you to be able to save for a deposit for that property, but also your actual wealth levels are falling further behind anybody else who does own a property. And the other thing, on your wages, you're paying a significant amount of tax, and you don't have the same generous tax deductions that those property owners have. And this is resulting in a lot of inequity in the Australian community. Even if you had a high-paying job, you'd still be way behind a principal property owner who has made hundreds of thousands in a couple of years, and that's basically all tax-free. So that's the dilemma. As we were saying, around a third of Australians are currently renting, and out of those renters, more than half of low-income Australians suffer rental stress. Home ownership is falling across all age groups, and it's not because people are not wanting to own a home. This is a direct result of the worsening housing affordability. Particularly worrying is the home ownership rates for the poorer in our community. Owning a home increasingly depends on who your parents are. Now, back in the 80s and 90s, it didn't really matter because the affordability of housing in Australia was so good that all you needed was to have a job and you'd be able to purchase a home and then pay off a home. And now, sadly, you've got a much better chance of buying your own property if your parents have property themselves. Now, I'm all for building up an inheritance and passing some of that down to your children. However, I don't want it to become impossible for Australians without support from parents to be able to get into the property market. I want them to be able to have that opportunity so they're not always at the mercy of a landlord, so they can feel that sense of pride in owning their own home. So the real major effect of these massive price rises in housing has seen a growing inequality and a rising homelessness in Australia. Now, this report is showing data to support that theory. However, it only seems to be going up to 2016. So I would hazard a guess that it is much worse right now in 2022 after extreme price rises in housing and a current rental crisis where demand for rentals is very strong and rental prices are rising rapidly. Now, these issues aren't just a problem in Australia, they are being mirrored in most parts of the world currently. However, some of the worst affected seem to be Australia, New Zealand, and Canada, which has seen some of the highest growth in house prices over the last couple of years. And these countries also have some of the worst housing affordability in the entire world. Okay, so that's where we currently sit. Which brings us to the policy change recommendation from the Grattan Institute. So the objective of these proposed changes is to reduce demand for housing. The recommendation: reduce capital gains tax discount and completely abolish negative gearing. The capital gains discount currently sits at 50% if you hold an asset for greater than 12 months. So instead of getting a 50% discount, the recommendation is for that to be reduced. An example of this might be only a 25% discount when you hold assets for over 12 months. So reducing the capital gains tax discount will mean that investors will have to pay more tax when they sell their investment properties for a profit. If this change was made, a question for the government would be, would it only cover housing, investment properties, or for example, would it cover all assets, for example, stocks bought and sold on the stock market? So abolishing negative gearing. Negative gearing is a tax incentive scheme in Australia that doesn't seem to be available in very many other parts of the globe. Negative gearing occurs when the cost of owning an investment property outweighs the income it generates each year. This creates a taxable loss, which can normally be offset against other income, including your wage or salary, to provide tax savings. Now, the included costs of owning an investment property in Australia are very generous because you can claim expenses like depreciation and things like that. When we've seen lately some very old type houses selling for super extreme prices that have nothing to do with the actual house itself, it is very generous because an investor may have been able to claim depreciation expenses every single year and then sell the property for a price which hasn't really been affected by any depreciation of that property. So negative gearing has allowed Australians to be able to accumulate more investment properties because they've been able to reduce their taxable income, for example, from their wages. So that's resulted in a tax refund, which helps them to be able to maintain all the repayments for the additional investment properties. Even Robert Kiyosaki, author of Rich Dad, Poor Dad, is calling for negative gearing to be axed. Kiyosaki thinks that it's absolutely stupid to get a tax break for losing money. He believes the government should be looking instead at giving tax breaks to people making good decisions. Now, this isn't a recent thing because I read a book from Robert Kiyosaki many years ago and he actually mentioned negative gearing in Australia. And even back then, he thought it was a crazy policy. According to the Orange Book, reforming these two housing tax policies would result in economic and budgetary benefits. By providing an extremely generous capital gains tax discount and the ability to negatively gear, it distorts investment decisions and makes the housing market much more volatile. And I would tend to agree. The housing market in Australia and across the globe has become very speculative and lately has resulted in people paying extraordinary amounts because of fear of missing out, because of exceptional demand, and also just plain wild speculation. If you think the market's going to always keep rising, no matter what you buy at, it makes sense to just buy whenever you can because you'll always make a profit. That's been the case in Australia for the past 40 years, and people have been rewarded by buying as many properties as they can, by getting as much housing debt as they possibly can service. And in my opinion, it's encouraged this over-leveraged type love and speculation of the property market. Now, according to the Orange Book, making these housing tax changes would not actually impact rents too much and would also not result in a housing collapse, which has been widely touted. Okay, so we've got some bold changes being recommended by a respected institute, which is only one of many different voices that are calling for housing affordability to be looked at seriously in Australia. Housing affordability in Australia was bad before COVID, but now with over 30% rises in the last 2 years in most Australian capital cities, it's gone from bad to disastrous. So there's a lot more pressure on the government to take this seriously and to make some changes. There's a federal election coming up in May, and whichever government wins, I believe they'll seriously look at housing policies and see if they can somehow make improvements to housing affordability for Australians. What do you think? Do you think the government will be willing to make some bold tax reform changes for housing? Or do you think they'll be too scared because 2/3 of Australians want their property prices to stay super high? Please leave me your thoughts in the comments below. I really want to know what you think. Also, do you agree with these recommendations in the Orange Book? Do you think the Grattan Institute has it right by recommending the abolishment of negative gearing and reducing the capital gains tax discount? Whatever happens, it's going to be watched very, very closely because, like I said, housing is the backbone of the Australian economy and Australians have a love affair with property. Hey, thanks so much for watching. I really appreciate it. Don't forget to subscribe to my channel for similar content on a broad range of finance topics. I'm Biko Konstantinos and I can't wait to catch you in my next video.